Good afternoon, everyone. This is Henry Gambell with simpleroptions.com, and I'm going to use today's free video to follow up on some of the ideas that I had shared yesterday. With these free videos, a lot of times, you kind of go back and forth on should every single one of them be a new idea, or should you follow up on some of the stuff that you shared before. And based off the questions that I'm getting, I think it will better serve people to just review what we have shared previously and then follow up on it. It doesn't hurt anything when the analysis plays out as good as it has in EXPE. So as we went into this, we were looking at the idea that this was a major swing high against a major swing low, and even if earnings were positive, that we would look for it to hold that 618 retracement on the way back up. That made that kind of convenient, or at least worth looking at, because we were utilizing it around a short 125 call. So with these unbalanced flies, and exactly like we looked at it in last night's newsletter, we had the idea, and this is the way we managed it in the chat room too, is that I closed out one of the entire spreads at the beginning of the day, got close to about $2.30 on that. So you take the $2.30, the addition of the 65-cent credit that we took in to begin with, and it leaves you with nearly a $3 trade. So not bad on the initial part of it. Then you can come down into wanting to scale out of this. So given that we were looking at it for the potential of holding below that 125, then we know to exit the other part of the spread, kind of the getting cute or getting aggressive with it aspect of it, is just selling that 120, 125 call debit spread, and then leaving the rest of that to expire. So at this point, I feel pretty confident that we're going to close below 125. You can see the market price of those has gone to 0. So that will expire, and that's really about the best possible case scenario for those unbalanced butterflies. Now there's another case where if you look at ATVI, where this is still, very favorable, it's not quite as good as Expedia because we are nowhere near the body strike. The big thing to take into consideration with this move, or at least with this type of a trade setup, is that we have no risk to the upside by initiating our butterfly at a credit. So this is another one of those situations where your butterfly will expire 100% worthless. You do not have to close it out, so you get to save the commissions on it, and that's the way that those go. Now, as far as NVDA goes, that's something that was a little bit faster than what I wanted to see this morning, and at 115 was my break-even price, so I will end up being down on NVIDIA a bit. I think that this is an interesting area to start looking at it for potential long setups once again, but anytime you have a significant swing, which I would consider the move from about 99 up into 120 to be significant, you want to pay attention to that 618 retracement. You can see we've come into the 382, which is the first most aggressive area that you would look at buying it. I think I'm going to have a little bit of a better edge back down here around 108, and that's where I will look to make another run at NVIDIA. So I hope that helps in relationship to the earnings that I've been trading this week, how to look at the management of them prior to the trade and following up after, and hopefully that helps for those of you that have been trying to follow along with more of those butterflies. Now, one thing I wanted to make you aware of here, next week we're going to have Bruce's favorite weekly income trading plan, so focus on some of the weekly options that he has been trading and what's working for him in this environment. Bruce is awesome at this type of strategy, and I feel like I learn something from him every time I get to hang out with him. So if that's something that you're interested in checking out, that will be next week on Wednesday, February 15th at 7 p.m. Central. That is a free webinar, and I hope to see you there.